Ultimate wealth is found in wisdom alone.
Hello, everyone. Neal here and Robert with Axiom Wealth Strategies, and we want to cover a couple of quick things around our portfolio models. How do we decide which funds we're going to include inside the models? What is our sort of process for analyzing, which funds, which investments we're going to include inside each of our models? So the purpose of this video is just to kind of give an overarching view of what it is that we look at and how do we choose those funds. There's more funds, either exchange traded funds or mutual funds, than there are individual stocks. So there's a lot to analyze here. So Robert, why don't you help us out? Where do we start?
That is a great question, Neal. And like you said, there are thousands and thousands of funds out there to choose from. So in large part, we're focusing on the best, most popular fund families like Vanguard, Schwab, BlackRock's iShares, American funds. We're looking at the best of the best, the most popular funds generally to start with. A lot of it, we like to focus on ETFs in large part. Generally, they have their passive indexed funds so that they keep the costs really low. We're looking at we're trying to find the lowest expense ratios that get the best value for the investments that we're doing. We're looking for the right allocations and the right indexes that we get the right objectives, balancing between growth and value and income and getting all those right pieces together to form a good diversified portfolio.
But we're also going to look at, does our initial analysis, these sort of best of class funds, do our conviction, do they match with other analyst positions? So we look at, U.S. News Morningstar ranking is one that a lot of folks know and have seen before, amongst a number of others. That can kind of give us a quick analysis of if we're on the right track and if other minds that do this for a living are aligning with ours. A couple of the other things we look at: total assets. So that's just the size of the fund. So each fund has a different size. Oftentimes the size of the fund will be related to the amount of trading volume on the fund. And that's important because if we're trading, every client that's in that particular model's account on that day to rebalance it, we want to make sure that there's sufficient volume for us to get the right pricing. Or if a client calls in and wants to sell, that we need to make sure when we put that sell order in, there's enough trading volume where we're not putting a market order in and getting something less than what we probably should have gotten for that. The other factor we look at is management tenure, which is just how long has the management team been managing that fund on average. Another factor that's related to that is the inception date of the fund. So, longer the inception date of the fund, when was the fund initially created? We'll be able to analyze data over a longer time frame. What else, Robert?
Now, everybody is always fundamentally interested in performance and risk. So we delve really deep into looking at the performance and the volatility factors in these various funds. And we're looking at their 1 year, their 3 year, their 5 year, 10-year histories. We're looking at the standard deviation, which measures the volatility. We're measuring their performance and what the returns are, and we're trying to come up with the highest potential returns for the lowest amount of risk, or vice versa, the lowest amount of risk to get an intended amount of returns. We go way into that stuff. And like you said, Neal, inception dates matters because the more history we have, the more data and statistics we have. Past performance is no indicator of future results, but the more data we have, the more reliable it seems to be.
Right. So we're looking at those things such as the Sharpe ratio, standard deviation, upside capture. When the market's up, is the fund up? When the market's down, how much of that downside do we capture? We look at that over a 3 year, a 5 year, and a 10 year across all those categories. And through this whole process, from best of class selection, low cost, sector, other analysts, rankings, risk metrics, trading volumes. It's from all these factors that we come out with what are our selected funds for this particular model. There's a lot that goes into that. Sometimes there's some that are very, very close, some that are very close but have a slightly different objective. And so we might have something in a similar category with a slightly different objective. One other aspect of this is that with our portfolio weighting, we can change this up or down. We can if we feel like there's a sector that's undervalued or overvalued, we can overweight or underweight that within the model. But choosing the fund that we're going to use in that sector for the asset allocation of the model, these are the factors that we analyze. But thank you, everybody. As always, never hesitate to reach out to us. If there's ever a question about something with regards to portfolio management or why do we own a particular fund inside a model, never hesitate to reach out to us. We love going into this.
We're here for you.
And you're never bugging us. So thank you, everyone.